So ICICI Bank has reported its Q4 FY24 numbers, and that's the special coverage on the earnings. And for the company this time around, a good set of numbers being reported, because on your screen you can see that though the NII as well as PPOP growth has been in line to what we were expecting at ET now, but the profit figure has come in above to our estimates, and this time the company has clocked in a profit of 10,708 crores, and that's a jump of 17.5% on a YOY basis. If we talk about the interest income, that also has seen a jump of 22.3%. The NII has been inched up at 8.1%. That was in line to what we were expecting. But look at the provisioning number, because provisioning has been significantly down by 32% on a YOY basis. I beg your pardon, on a quarter-on-quarter basis, wherein provisions have been down to 718 crores this time around. And that's maybe one of the factors that have led to this kind of a growth. On the asset quality front, what we are seeing is that is seen to be improving. The GNPA is being down 14 basis points on a sequential basis to 2.16%, while the NNPA has improved by 2% on a quarter-on-quarter basis to 0.42% versus 0.44% in the last quarter. So all in all, a good set of numbers coming in from ICICI Bank, though the NII has been in line, but the profit has been significantly above to what we were expecting at ET now. Our expectation was 9,112 crores, and the company reported over 10,000 crores onto their profit figure. We have with us Aditya Shah, who is the founder of Hercules Advisors. Hi Aditya, very good afternoon, and thank you so much for your time. First of all, wanted to understand, how do you look at the ICICI Bank numbers? We just had the numbers in, wherein the profit has been reported at over 10,000 crores and the provisioning is down by 31% on a quarter-on-quarter basis. Your first cut on the ICICI Bank earnings versus your estimates, Aditya.
Yeah, hi, good evening. So I think that the results are bang in line. They're good results. The loan growth has come at about 16.8%. The deposit growth is at about 19.8%, and the slippages are at about 1,221 crores, which is really very good from ICICI Bank. So net, there's nothing to complain about. A good set of numbers, as you would expect from a retail bank, as you would expect from a bank that is undergoing a retail transition. So nothing to complain about. We need to understand from ICICI Bank the feedback on the market. Also, we need to understand what really happened with those 17,000 credit cards where they were wrongly mapped. But net, nothing to complain about. Good set of numbers and steady from ICICI Bank.
All right, good set of numbers. And in the commentary, we'll be watching out for the management commentary on the recent news flow, where there was a hit to 17,000 credit cards. We will also be watching that for Aditya. But other than that, Aditya, the company has also announced a fundraise via debt in a tune of 25,000 crores. How do you look at this announcement?
So routinely, large private sector banks are tending to raise money because they are seeing a strong credit flow. So I would not be worried too much about that. If there was an equity dilution from the bank, then I would be worried. But the capital adequacy for the bank is really very strong. So nothing to complain about and nothing to worry about. And this is a part of the routine fundraise cycle that the banks really go through.
All right, nothing much to look into this, but the advances in this quarter has inched up by 16.2% on a YOY basis, while the deposit growth has been quite strong at 19.6% on a YOY basis. Aditya, lastly, onto the management commentary, any specifics that you will be looking out forward to after a strong set of numbers? Anything that you will be looking out forward to other than that credit card commentary?
Yeah. So RBI has been warning on the mispricing of loans on the retail side of it. So we will monitor what ICICI Bank is really saying. Last quarter, ICICI Bank had a commentary that they had given up 50,000 crores of loans because of mispricing of retail loans. So generally, the demand environment is something that we need to monitor. The approach on the IT side of it, where RBI has been really very strong and it has put an embargo on Kotak regarding their ITI system. So that is something that we will clearly watch out for. And generally going forward, what is the stance of ICICI Bank? Are they cautious or are they aggressive on the loan growth is something that we will really see. And lastly, we need to also monitor what is their commentary on the deposit side of it. Is deposit accretion really very strong? We've seen ICICI Bank grow at about 20%, which is absolutely really very strong. So these are the 4 or 5 things that we will tend to see in the commentary.
And lastly, before we let you go on that, Aditya, what's your take on the advances growth, and in the pecking order, where will you place ICICI Bank amongst all the large private sector banks?
Yeah. So the advances growth is pretty strong. It is at 16.8%. We saw HDFC Bank grow at about 17%. So amongst the large private sector banks, even Axis Bank grew at about 16%. So bang in line with all the peers that they are really doing. Amongst the ratings, from a ratings perspective, ICICI Bank is doing brilliantly on their business. So there's nothing to worry about. I will put it amongst ICICI Bank, HDFC Bank, and Axis Bank. Those will be the 3 large private sector banks that I will look out for in that order.
Well, yes, all 3 of them reported strong set of numbers. With this, we'll let you go on that. Thank you so much, Aditya, for joining us today and helping with the first cut and analysis on ICICI Bank numbers. So that was ICICI Bank result analysis. A strong set being reported this time around. Asset quality seemed to be improving. Provisioning has been low. The profit is significantly higher to what we were expecting at ET now, while the NII and PPOP growth has been in line to what we were expecting. But it's the thick of the earnings that we are in, and shifting focus to Shriram Finance then, which also reported its Q4 numbers, and the net interest income was seen to be a beat to the street estimates, while PPOP and profit was largely in line with the estimates. My colleague Snehi is joining us to give us the earnings fine print.
Well, yes, so let's take a look at what Shriram Finance's Q4 numbers look like, largely coming in line with street estimates. Let's break them down. Their net interest income has come in at 5,336 crores on a consolidated basis, which is up 20% on a year-on-year basis. Now, this is largely in line with street estimates, but slightly above what we were estimating here at ET now. Operating profit has come in at 3,906 crore rupees, which is up almost 10% on a year-on-year basis as well, in line with what the street was expecting. Net profit also very sharp uptick coming in over here, 1,946 crores versus 1,300 odd crores last year. So that's an uptick of 48.7, in line with the 49% uptick that we were expecting at ET now. NIMs have remained largely stable at 9.02% versus 8.99% sequentially. Return on assets and return on equity both have seen some good moves coming in over there as well.
If you like this video, then like, share and subscribe to ET Now.